Hey everybody, how you doing? I'm going to talk about the Trump tax plan because we're starting to get some details on that, and of course that will be, if it passes, that is going to be very impactful on the economy and the markets, and that is a plan over the next 10 years. So the main tenets or the main points of the plan, at least from the tax cutting perspective, there's really three things. One is shrinking the number of tax brackets down to three. We're going to have a 12% bracket, a 25% bracket, and a 35% bracket. So the people at the top level of income, they will see a reduction from 39 to 35. And the people at the bottom, they will actually see an increase. So you could say he has gone back on his word there about a middle class tax cut. So they'll see an increase from 10% to 12%. The next feature of the plan is a doubling of the standard deduction. That's pretty good. I mean, that's going to go up to $12,000 and $24,000, depending on how you file. But that's a doubling, a near doubling of the standard deduction. And finally, a reduction in the corporate tax rate down to 20% from 35%. They were talking originally about 15%. And by the way, I have been over this many times, that if you look right off the daily Treasury statement, when it gives you to the dollar the amount of corporate taxes paid right now annually out of 2.8 trillion of total taxes collected by the federal government, corporate taxes come to about 350 billion. I'm not making this up. This is right off the daily Treasury statement. So that roughly equates to 13%. So anybody who's telling you now that corporations are paying 35%, that is just nonsense. The effective rate, the rate the government at which the government collects, is 13%. So anyway, they're going to lower the official rate down to 20%. That might allow companies to shave off even more from what they're paying right now. But don't be fooled by this 35%. Nobody's paying 35%. It's like when people used to say, prior to JFK, the top tax bracket was 95%. I had a guy tell me, Eisenhower built the highway system because rich people were paying 95% back, in the 1950s and early 1960s. No rich person paid 95%, okay? There was a whole entire industry of tax shelters to avoid that. That was a symbolic tax. And by the way, even if rich people did pay 95%, it still wouldn't be enough to build the interstate highway system. How was the interstate highway system built and financed? By deficit spending. That's how it was built and financed, okay? So anyway, 20% on the corporate tax rate, and they're going to repeal the AMT, the alternative minimum tax. That's good, because a lot of people who are self-employed, that is a very onerous tax. That is a nasty tax. They're going to get rid of that. And there are some tax increases to balance this off, but the total net amount, which is projected by the Committee for a Responsible Federal Budget, yes, those are the guys who are, these are the debt fear mongers, all right? These are the ones, we got to watch out for the debt, we got to watch out for the deficit, but they're the ones who did the estimate of what this entails, and they're saying it will be a net deficit over 10 years of 2.7 trillion. In other words, it will expand the debt. So in other words, another way of saying that's 2.7 trillion over 10 years. That is an additional 270 billion of net income and savings to the non-government. That's us. That's everybody who is not the government. 270 billion. I mean, if you think about it, this year we are on track to do a record amount of federal spending. We're going to beat 2009, which was 4.586 trillion net. We're going to go over that by the end of this month, or we'll be very, very close to it. We'll be very, very close to it. We might go over it. And you're going to, and so this year we're having so far, you saw the second quarter GDP growth 3%. Stock market is very strong. We're getting some pickup in commodity prices. Oil back over 50. Gold prices back up around 1,300. Now you're going to add another 270 billion annually. So you see what's going to happen. That is very inflationary. Very inflationary. That is a significant boost in spending over what the current spending rate is. All right. Now, I have to also throw in here the fact that they need to pass a budget. Otherwise, this tax program is not going to happen. And they haven't passed a budget in 8 years. But if they pass a budget, it's likely going to be roughly equivalent to the spending levels we have right now. So you could pretty much factor in an additional 270, and they always go over, you know that, because there's going to be a war to fight somewhere that we got to, pay for. But minimum 270 billion. So the next 10 years, all right, what does this mean for gold? Way up. What does this mean for commodities? Way up. What does this mean for the stock market? Good question. Inflation-sensitive stocks, material stocks, way up. What does it mean for interest rates? Way up. Why? Because the Fed is going to react to higher inflation levels, and they are going to be raising rates maybe for the next 10 years. Who knows? So that's actually probably the best trade out there right now is short treasuries. Like nobody is doing that because everybody is saying, oh, the Fed's going to have to lower rates, the economy's slow. And you know what's funny about that? It's all the same people who 10 years ago were saying that the low rates, are going to cause hyperinflation, and that when the Fed started doing QE, they said it was going to be QE infinity. They were never going to be able to stop. Well, guess what? They've stopped that. They're reversing it next month. They're raising rates. Inflation is going up. So that is what's going to happen. That's a freebie to all of you. Now, of course, I will have more detail in this to my MMT Trader subscribers, individual recommendations, whatever. If you want to sign up for a 30-day free trial of MMT Trader, then go to my website, pitbulleconomics.com, and right there on the front page it says get the 30-day free trial. While you're at it, you could test out Zombie Trading. Zombie Trading is a Forex signal service. We front run the zombies and we get out before they die. All right. And of course, I have my courses on there. I said before, everybody, without question, should learn how to trade Forex, even if you never use it, or even if you only use it to park your idle funds in higher yielding currencies like a savings account. Everyone should learn how to trade Forex. These are the biggest markets in the world. 24 hours a day, 7 days a week, 365 days a year. Spot Forex, absolute, the most liquid markets in the whole entire world. And by the way, if you trade Forex, you really don't even need to trade anything else, because you can use Forex to create a proxy for any macro environment. You're bullish on oil, you could do that with Forex. You're bullish on gold, you could do that with Forex. You're bullish on the stock market, you can do that with Forex. You're bearish on all those things, you could do that with Forex. All right? You don't need anything else. So I have my course, the Forex video course. That's 5 videos of 5 hours each. You can get that on my site. You could also get my special offer 3-course bundle, which is the Forex video course, the Understanding the Daily Treasury Statement course. Folks, if you want to impress your friends and your colleagues and really tell them, say, you know what? You're worried about Social Security 40 years from now because it's going to have a $4 trillion shortfall? Well, guess what? The government paid back $87 trillion in public debt securities this year alone. So what are we worried about 4 trillion 30 or 40 years from now? Paid back. Not making this up. The number is right there on the Treasury's own books. You just don't hear about it. Nobody tells you about this except me. You can get that course, the Forex course, and my MMT value stock trading course for $295. All there on my website, pitbulleconomics.com. See everybody later. Bye.